investors abreast of what I'm doing. So my model portfolio continues to take shape, and I currently have 11 stocks in there. Turning to the market today, let's see where we're at with about 50 minutes left to go in Tuesday's session. We have the Dow down about 61 points. That's 0.5% to 12,531. Tech stocks outperforming just a little bit. The Nasdaq's up close to 3 points, 0.1% to 2845, and the S&P 500 down about 2.5 points, 0.2% to 1334. What else is new? Another low volume day taking shape for the major averages. At last check, it looks like volume is tracking higher than Monday's very light levels. On Monday, we saw New York Stock Exchange volume of about 760 million shares, so we could come in slightly higher than that. Looks like it'll still be below average. Nasdaq volume yesterday, 1.57 billion shares, well below average. Again, volume today tracking a little bit higher, but looks like volume on the Nasdaq will be below average as well. So obviously the market's attention is on the debt ceiling talks in Washington as the August 2nd deadline approaches. Taking a look at gold, August gold added $4.60 or 0.3% to settle at $16.80 an ounce. That's $1,616.80 an ounce. Oil up 0.4% to 99.59 a barrel. I have a chart of the S&P 500 up right now, and again, if you're watching on Tiger TV at tfnn.com, you can take a look at it right with me. Nasdaq is obviously not far at all from a key resistance level at 1356. So there's some people calling for this market to pull back, come in price. Of course, that's a possibility. That's what makes this market tough right now, is that it really could go in either direction. I'm keeping my fingers crossed for a possible upside breakout over 1356. That would be the intraday high right in this area here. It's not out of the question. You just get this feeling that there's obviously money on the sidelines that I think wants to come in. It may come in if Washington can sort out the problems going on with the debt ceiling negotiations. Taking a look at the Nasdaq as well, we'll take a look at the tech index and see where it's at. It's also not far at all. Actually looks slightly better than the S&P 500. The Nasdaq is very close to a swing point here of 2878, maybe 2879. So a breakout in this index is not out of the question either. The question is, if the S&P 500 and the Nasdaq are able to clear these swing points, what are the chances that we're going to see a good push in trading volume? In other words, on the Nasdaq, are we going to be able to see a 2.2, 2.3, 2.5 billion share day? And I'm not real convinced that we'll see a good volume push if we do get a breakout. I've said in recent shows that I wouldn't be surprised to see the current market play out similar to what it did last year, where we saw some strength in July, some softness in August that eventually set us up for a good pop into the end of the year in late August, early September. So I wouldn't be surprised to see a little bit of softness in the month of August once earnings season ends and investors have a chance to digest many of the outstanding earnings reports that we've seen in recent weeks, and more to come this week, I think. But once earnings season ends and investors start to focus on the economy again, wouldn't be surprised to see a little bit of softness. That may not happen though. Again, if buyers do come in with a vengeance on news of a debt ceiling deal in Washington, we could see good breakout for the S&P 500 over 1356 and a good breakout for the Nasdaq as well over 2878. So. At last check, the U.S. dollar index stocks are hanging in there today. Dollar index was weak, recently down about 0.8% to 73.48. And we could take a look at the UUP, which is a popular ETF, the PowerShares U.S. dollar index bullish. And dollar, once again, every time the dollar tries to strengthen, selling pressure hits it, and you can see it was hitting higher highs in this area here. Now the dollar has just been obliterated over the past 2 weeks or so. The UUP down 0.9% to $20.92. So I'm sure you all had a chance to see President Obama and House Speaker John Boehner on TV last night. It really is a debacle what's going on in Washington. It's tough to watch. You'd never think that compromising would be so difficult. Politicians seem to be completely immune to what the American people are feeling. Everybody wants this this debt ceiling debacle to be over and done with weeks ago. But where we're at now, John Boehner is trying to round up the votes for his plan to cut spending by about $1.2 trillion and extend the debt ceiling for about 6 months. Apparently he's even facing some opposition from conservative Republicans over this plan. Senate Democrats, meanwhile, are preparing to act on a plan from Senate Majority Leader Harry Reid that would raise the debt ceiling by $2.7 trillion and cut spending by about the same amount. So I do believe that we're going to get some sort of a resolution. I think maybe a month or two ago there was a thought that it would be a detailed legitimate attempt to cut the deficit and get this debt ceiling resolved. But at this point, it's the resolution is probably just going to be a kick the can down the road, and they'll continue to debate it in coming months. Take a look at shares of Radio Shack today. Stock is having a very good day. That's ticker symbol RSH on the New York Stock Exchange. Shares of Radio Shack up close to 19% today to $15.57, trading off its highs of $16.25. But the news today is, excuse me, that Radio Shack has discontinued its relationship with T-Mobile and replaced it with Verizon Wireless. Verizon will start providing postpaid and prepaid wireless products to Radio Shack stores starting September 15th. So big day for shares of Radio Shack, up close to 19% to $15.57. Economic data earlier today. Not too bad. We had a pretty good reading in consumer confidence from the Conference Board. The Conference Board said its confidence index increased to 59.5 in July from a downwardly revised 57.6 in June. Meanwhile, sales of new single-family homes fell 1% in June to an annual rate of 312,000 units. Sales for May were revised slightly lower to an annual rate of 315,000 units. In related news, home prices rose for a second straight month in May, according to new data released Tuesday. The S&P Case-Shiller 20 City Index, which tracks changes in home prices, rose 1% from April. Over the past 12 months through May, prices have fallen 4.5% and have plummeted 32% from their peak in 2006. So kind of middling new home sales data. Housing prices still kind of sluggish, and a better than expected reading in consumer confidence. Have some interesting economic data on tap for the rest of the week. Tomorrow, durable orders and the Fed Beige Book. The Fed Beige Book is basically an anecdotal look at economic activity around the country from the Fed's, I think it's 12 districts. Is it 11 or 12? I think it's 12 districts that the Fed covers. But anyway, durable goods orders and Fed Beige Book tomorrow. On Thursday, we have weekly jobless claims, and on Friday, some key data include the Chicago Purchasing Managers Index. The first look at second quarter gross domestic product, that's expected to come in at 1.7%, and the final reading from the University of Michigan Consumer Confidence Index. Taking a look at some IPO news as well. Looks like we have 11 deals now scheduled to price this week. The U.S. IPO market could see its busiest week since November 2007. The high-profile IPO Dunkin' Donuts is set to offer 22.3 million shares between $16 and $18 a share. I heard rumblings today that price range was raised to 19 to 20. Can't confirm that. Wouldn't be surprised, but I know that Dunkin' Donuts was originally going to offer shares between 16 and 18. Again, there's looks like they may have raised it to 19 or 20, but I haven't been able to confirm that. Dunkin' Donuts, of course, is most known for its coffee and donuts, but it also owns the Baskin-Robbins ice cream chain, which has some pretty good ice cream there. All right, speaking of IPOs, let's take a look at Yandex, ticker YNDX. Some very interesting IPO setups out there. Yandex is a recent new issue. It came public earlier this year, and good breakout early. You can see the stock is trading near its session low. Shares are still up close to 3% to 37.59. It cleared a swing point today of 37.09, so it's trading just above its buy point. But Yandex is a internet search firm that's based in Russia. They basically do what Google does in Russia. They basically do what Baidu does in China. So of course Baidu having a big day today on strong earnings last night. But yeah, Yandex, you really don't want to see this type of action on a breakout day. This is actually exactly not what you want to see. Anytime a stock breaks out and clears a swing point, you want to see a finish near the session high. You want to see demand remain strong all day for shares, and that does not look to be the case with Yandex. Shares hit an intraday high of 39.67, recently trading around 37.59, near its low for the day. But still up about 2.8% for the day. So Yandex having a good day. And boy, we've got a bunch of earnings reports to go over. I also want to take a look at LinkedIn, but plenty of earnings, plenty of heavy volume gainers, some heavy volume decliners as well. So we'll get to that when we come back. We'll be right back, folks.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Direxion Shares Leverage ETFs fuse the benefits of exchange-traded funds with the innovation you expect from Direxion, providing investors with opportunities to magnify their short-term perspective, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. Direxion Shares, ETFs to the power of X. To learn more about Direxion Shares, click on the Direxion banner on the front page of TFNN.com or call 866-476-7523. There is no guarantee that the funds will achieve their objective. The ETFs are not suitable for all investors and should be utilized only by sophisticated investors who understand short-term trading, leverage risk, consequences of seeking daily leverage investment results, and intend to actively monitor and manage their investments. An investor should consider the investment objective, risk, charges, and expenses of Direxion Shares carefully before investing. The prospectus contains this and other information and can be obtained at DirectionShares.com. Please read the prospectus carefully before investing. Distributed by Foresight Fund Services, LLC.
TFNN and Tom O'Brien have announced a one-of-a-kind special for this month only. During July, if you purchase at least $500 worth of Tiger Dollars, not only do you get a 20% bonus, but you also gain access to an exclusive one-day online class with Tom O'Brien. Tom's live one-day webinar will take place Monday, August 8th, and of course will be archived if you can't attend or just want to review. Tom will focus on the 5 primary fundamental core techniques to become a master trader trader, and the only way to gain entry to this exciting one-day class is by purchasing your Tiger Dollars in the month of July. The best part about Tiger Dollars is you can spend them on a variety of newsletters and products we offer. Bud, Basil, Ken, Dave, Steve, Larry, Tom, or Nico, no matter your preference, they all accept Tiger Dollars for their services. Purchase your Tiger Dollars this month and don't miss out on Tom's exclusive full-day webinar. Visit TFNN.com and act today. Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing. I'm your host, Ken Shreve. Before we went to break, we were talking about recent IPO Yandex, YNDX, which is riding Baidu's coattails higher today. Baidu reported strong earnings late Monday, but seeing some interesting action in the IPO market. Also wanted to take a look at LinkedIn. They basically operate an online professional network. The stock came public in May at $45 a share. Stock is recently trading around 102.52, up 1.65% on the day. And this is an example of an IPO that is forming what would be called a first stage base. And if the market can find its footing here and we get a new round of money that comes into this market, a breakout over its recent high of 110.50 is not out of the question. Now, a lot of people questioning LinkedIn's valuation. I mean, there is a story of revenue growth here, and that is similar with a lot of IPOs that we've seen in recent weeks. Yandex, based in Russia, search firm there, is actually profitable, shows good bottom line and top line growth in recent quarters. LinkedIn is expected to post an annual profit of 32 cents a share in 2012. Probably will lose money this year. Looks like about 6 cents, a loss of 6 cents. But excellent top-line growth in recent quarters for LinkedIn, which should ultimately translate to profit growth down the line. But this is an interesting base taking shape, and we'll be watching to see if this stock can stage a breakout over 110.50. All right, mentioned a lot of earnings reports today. This is a super busy week in terms of earnings, and we can take a look at shares of Netflix, which obviously has been a huge performer during the 2+ year bull market. Interesting price action for the stock today. It hit an intraday low of 251.46. Shares are back trading around 267.42. That's still down about 5%, but it is trading all the way up at its session high. Obviously, Netflix raised prices. These rate hikes are going to take effect in September. Some estimates say that Netflix could lose up to between 2.5 million subscribers because of these rate changes. But the company's missed on the top line. Its earnings yesterday were not great. The earnings were up 57% to $1.26 a share. Sales were up 52% to $788.6 million, but that was a little bit below estimates. And their forecast for the third quarter, a bit lukewarm. They said subscriber growth is probably going to stay flat because they're expecting to lose, of course, customers due to the recent rate hike. So that's the deal with Netflix, and Netflix is a high multiple stock. I wanted to take a look at a weekly chart of Netflix, which give you a longer term perspective on the stock. And the bottom line is that Netflix is what we would call a late stage base. In other words, it's a stock that's up 400, 500%, something like that, since March 2009. During its lengthy uptrend, it has formed a series of consolidations. It's basically getting long in the tooth. I think it's highly unlikely after a day like today and the technical damage that's been done, even though it is trading near its intraday high for the day, and there was an analyst came out today and reiterated his rating on the stock. Forgot what the rating was, but some analysts came to the defense of Netflix today. But this company's growth story is known. So I actually sold Netflix for my Ultimate Growth Stocks model portfolio on July 15th. I didn't own the stock for very long, but I took several points, 10, 11 points of profit in the stock when I have it. I just knew that it was near a top, and I'll never forget. Bill O'Neill from Investors Business Daily. One of his famous quotes is that fundamentals can look the best at or near a stock's top. And I've heard him say that many times, and I've really taken that to heart in recent years. People that use fundamental analysis alone aren't going to be able to recognize when a stock eventually starts to flash topping signals. And that may or may not be the case with Netflix. All I know is that it's made a major price move over the past couple of years, and I think a pretty good argument can be made that the big money has been made in the stock. All right. Also wanted to take a look at ARM Holdings, ARMH. Let's take a look at a weekly chart of ARM Holdings and see what this stock is doing. You can see this stock is still trying to break out over 32.18, not having much luck. It's been consolidating gains for several weeks, but earnings were pretty good. Stock was recently trading around 29.47, down about 1% or so. Earnings were up 27% from a year ago to 14 cents a share. Sales up 27% to 189.4 million. Strong demand for its microchip designs, which are found in most smartphones, tablets, and televisions. Competes with Intel. We'll be right back, folks.
Purchase Tiger Dollars during the month of July, and you will be automatically registered to attend Tom O'Brien's one-day live webinar, 5 primary core techniques to become a master trader, at no additional charge. Your purchase of Tiger Dollars is the only way to gain access to this exclusive webinar. The one-day webinar will be held Monday, August 8th, from 8 a.m. till 3 p.m. The course will also be archived on your members page for you to view at your convenience. Go to the front page of TFNN.com under Breaking News and order your Tiger Dollars now. TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com. Win free silver all summer long during our Great Panther Silver Summer Silver Giveaway.
So let's go to our man, Dan from Reading, Massachusetts. Dan, are you on the line?
I am. I got a call that I won that Great Panther giveaway.
Oh, good for you.
Yeah.
Hey. That's great. That's great. Did you believe you were going to be a winner?
I doubted it. I don't usually win, but pleased to win.
Starting Tuesday, June 21st through Labor Day, TFNN will hold a drawing once a day, 5 days a week, business days only. One lucky entrant will receive one of these beautiful coins.
Today's winner is Len Winograd from Hollandale, Florida. How are you today, Len?
Never better. I feel so good. I should be twins.
Congratulations. Beautiful silver coin. How long have you been listening to TFNN, Len?
I listen every day for the last 4 years.
Winning one of these extraordinary coins could not be easier. There's no contest and no gimmicks. Go to the front page of TFNN.com for more information. Win free silver all summer long during our Great Panther Silver Summer Silver Giveaway.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Rand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Purchase Tiger Dollars in the month of July. Order Ultimate Growth Stocks and receive access to Tom O'Brien's exclusive one-day live webinar. 5 primary core techniques to become a master trader.
Just checking out a headline here at homepage of Yahoo Finance. White House threatens to veto Boehner's House plan. White House threatened on Tuesday to veto emergency legislation pending in the House to avert a threatened national default. So just a big mess going on there. You have to say, though, the market is reacting surprisingly well to all of the uncertainty that exists in Washington regarding the raising of the debt ceiling. So credit to the market, and hopefully we get a resolution. We'll see some buyers come into the market here. One thing I'm convinced of, though, is I think that the underpinnings of this economy, as someone who tends to look at the glass as half full, I do think that sometime between now and the end of the year, we are going to see another good round of institutional money come into this market, which is going to cause some great leadership to emerge, and it's going to be important to be ready for that when it happens. It's again, it happened last year in late August, early September. That scenario could happen this time around as well. We're going to need economic data to help, and we'll need some other things to be in place. But I am convinced that we will see a new round of money come back into this market. We certainly haven't seen it in recent months. But I think it will happen before the end of the year. Before we went to break, I was just talking about earnings from ARM Holdings. This is another example of a late-stage base. I just wanted to wrap up my thoughts on ARM Holdings. Looking at a chart right now in Tiger TV of ARM Holdings. Again, this is a chip maker, does microchip design. Some of its technology are in the iPhone, but this is a stock that has made a huge price move. Okay, so now it's been consolidating gains for several weeks. Swing point of 32.18. It's still about 10% or so below that swing point. Technically, doesn't look bad. It's holding above support levels, but the stock unable to respond to what seemed to be a pretty decent earnings report. Again, earnings up 27% from a year ago to 14 cents a share. Sales also up 27% to 189.4 million. Company also seemed optimistic about the second half of this year. Again, stock for the week is down about 2.4%. Shares are recently trading around 29.48. Let's take a look at 3M, ticker MMM. Not a good day for 3M Corporation. Stock was trading down 5.5%. all the way down near its session low. This is another earnings story. Earnings up 4% from a year ago to $1.60 a share. Sales up 14% to $7.68 billion. The company raised the low end of its guidance for 2011. Now sees full-year earnings to in a range, I should say, of $6.10 to $6.25 a share. That's still below the consensus estimate of $6.29. I think 3M also talked about the Japan earthquake and how it hurt margin a little bit. Big day for Domino's Pizza. Let's take a look at Domino's. I thought I knew that. That's DPZ, Domino's Pizza. What a move for the stock today, but after early strength, another example. Again, this is not the type of action you want to see on a breakout day, and it's really kind of reflective of the type of market that we're in here. When you're a breakout investor, someone like me who likes to target stocks that are coming out of consolidation areas, breaking out in heavy volume, you're just never quite sure in this market if they're going to work, even if it's a high-quality company. Domino's, definitely a high-quality company, good track record of growth. Stock is still up 3.9% today to $27.09, but well off its intraday high of $28.74. So never like to see a breakout close all the way at the intraday low. That could be happening with Domino's Pizza. Really a story of international growth at Domino's. Company said it expects its international business to surpass its domestic stores in the fall of 2012. CEO Patrick Doyle said the company is about 15 to 18 months away from having more stores and retail sales outside the U.S. than inside. We'll be right back.
Tom O'Brien's weekly newsletter, The Gold Report, gives traders, investors, and money managers a thorough strategy for trading in the gold market. If you're an investor in gold or any of the gold mining equities, this newsletter is an essential tool that can help you become a better trader in the gold market. The Gold Report comes out every Monday with complete coverage of the entire gold market, including the XAU, HUI, the dollar, the bond, the rand, as well as more than 35 different mining equities. For the low price of $150, you will receive 13 weeks of the Gold Report, or you can order up to a full year for under $500. If you'd like to find out more about the Gold Report, log on to tfnn.com, or for more information, call our office at 877-518-9190. That's 877-518-9190.
TFNN and Tom O'Brien have announced a one-of-a-kind special for this month only. During July, if you purchase at least $500 worth of Tiger Dollars, not only do you get a 20% bonus, but you also gain access to an exclusive one-day online class with Tom O'Brien. Tom's live one-day webinar will take place Monday, August 8th, and of course will be archived if you can't attend or just want to review. Tom will focus on the 5 primary fundamental core techniques to become a master trader, and the only way to gain entry to this exciting one-day class is by purchasing your Tiger Dollars in the month of July. The best part about Tiger Dollars is you can spend them on a variety of newsletters and products we offer. Bud, Basil, Ken, Dave, Steve, Larry, Tom, or Nico, no matter your preference, they all accept Tiger Dollars for their services. Purchase your Tiger Dollars this month and don't miss out on Tom's exclusive full-day webinar. Visit tfnn.com and act today.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing. Before we went to break, I was just finishing up some thoughts on Domino's Pizza. This is a company that, quarter after quarter really tends to do well. Technically, it looked very good ahead of its earnings report. Kind of disappointing action today on the breakout. I mentioned the stock is up close to 4% to 27.09, but its intraday low is 26.81. So it's pretty close to its intraday low, and not the type of price action you want to see on a breakout. But tell you what, the more breakouts I looked at today, that is a pretty consistent price action that I'm seeing. The only exception is let's take a look at Baidu. This is one that is holding on to its gains. Shares of Baidu up about 5% to 164.71. Gap up today, trading up near its intraday high, so good performance there. But also wanted to take a look at National Oil Well Varco. That's ticker NOV on the New York Stock Exchange. Pretty strong earnings here as well, but look at this. I mean, a spectacular reversal in this stock after hitting an intraday high of 86.71. The stock is now down 4 cents to 82.27. So longs have to be disappointed with that price action. Earnings up 18% from a year ago to $1.14 a share. Sales up 19% year over year to $3.5 billion. All three of its business segments, rig technology, petroleum services and supplies, and distribution services, all posted gains from the year ago period. So after after breaking out today, again hitting an intraday high of 86.71, National Oil Well has reversed and is now slightly lower. Let's take a look at some heavy volume gainers today. Stocks moving higher in expanding trade. Anytime you see volume expand to well above average, it's normally a hint of at least some institutional buying in that stock, and that is worth noting. Let's take a look at ticker GRA. That's W.R. Grace and Company. Good day for the stock. It's up almost 13.5% to 51.98. You can see it's up near its session high, showing very bullish action. A lot of people do not like to buy gaps up in price, but if you had done it recently with Google, if you had done it recently with Intuitive Surgical, you'd still be doing pretty well. So it's counterintuitive buying when a stock gaps up. You say, I'll just get it on the pullback. It's eventually going to fill its gap. Well, not all stocks fill their gap, especially if they're very strong. So we'll see how W.R. Grace trades in coming days, but very strong day today, up more than 13% to 51.98. This is a chemical maker that reported a profit of $1.11 a share, up 46% from a year ago. Sales were up 21% to $826.4 million. The company also raised its 2011 sales guidance to between $3.25 billion and $3.3 billion, up sharply from its February prediction of $2.85 to $2.95 billion. So W.R. Grace firing on all cylinders, and remember, buying gaps up in price is not as bad as it sounds sometimes. Really strong stocks sometimes never fill their gaps. Some do, some don't. Let's take a look at a China name here that's doing well today. Changyou.com, CYOU on the NASDAQ. Let's take a look at Changyou.com. I know I have it here somewhere. There it is. CYOU on the NASDAQ. Stock broke out powerfully yesterday over 47.81, and actually extended gains today, up another 7.8%. Actually, this is the weekly chart. I'm sorry. Let me pull up a daily here for Changyou. Looking at that weekly chart, it just didn't look right to me. All right, there's Changyou. Broke out yesterday. Stock extended gains today, but another example, buying demand is drying up. Stock is only up 0.7% now to 49.56, but the stock did break out powerfully yesterday. Tried to extend gains today, still up 0.7%, but trading near its session low. So that's a common theme today. Changyou.com is another internet name in China. A lot of the China names doing well today. Changyou.com provides multiplayer online role-playing games in China. Earnings are due August 1st. And this raises an interesting point. Do you buy a stock ahead of earnings because it's acting well? Typically, that's very risky business, especially in a fast-growing name like a Changyu.com. At this point, I'm looking for stocks to buy in my model portfolio, but the vast majority of the time, 99.99% of the time, I'm going to wait for earnings to pass before I take a position in a stock. There will be exceptions, rare exceptions here and there, but it's a pretty risky game. So typically, over the next couple of weeks, I'm going to be any stocks that are on my watch list, and I saw highlighted a few of them today in my weekly update. I'm going to wait for earnings to come out and then make a decision about what I want to do with the stock. But with earnings so close, with Changyu.com due August 1st, buying the stock ahead of earnings, I think, is a bit risky here. All right, let's also take a look at CEVA. That's ticker CEVA. Another little-known company here, but a company that really has a good track record of growth. The company designs and licenses silicon intellectual property for the handset, portable media, portable multimedia, and consumer electronics markets. Earnings up 83% from a year ago to 22 cents a share. Sales up 36%. To $14.4 million. So it only did $14.4 million in the quarter, but this is a very well-run company. Again, not a widely known name, but sometimes these are the best. These are the best types of stocks. It has a market cap of $745 million in a decent base here. Looks like it could try to take out a swing point of 33.26. That would be its high right about here. But again, stock is having a good day today. Gapped up close to 7.6% currently to 32.37. So CEVA, an interesting name on the NASDAQ that also reported strong earnings today. And finally, let's take a look at a weekly chart of Helix Energy Solutions. Let's take a look at Helix real quick here. I don't have a weekly, but let's look at the daily. It's ticker HLX, Helix Energy Solutions. Strong earnings here too. Stock gapped up close to 11% today to 20.53. We'll go over the details when we get back, folks.
Hi folks, this is Tom O'Brien. To help you celebrate your trading independence during the month of July, we are offering you a unique opportunity to get all of the TFNN outstanding products at a substantial discount and to receive access to an exclusive webinar that you can only get with this offer. If you purchase Tiger Dollars during July, you will automatically be registered to attend my live webinar at no extra charge. During this one-day webinar, you'll spend 5 hours in the TFNN virtual classroom learning the 5 primary fundamental core techniques to become a master trader. The live one-day webinar, 5 primary fundamental core techniques to become a master trader, will be held on Monday, August 8th from 10 a.m. to 3 p.m. If you're unable to attend the live webinar, the course will be archived on your members page for you to view at your convenience. Outstanding TFNN products at substantial discounts with a free webinar. Now that's a great way to celebrate your trading independence. Go to the Tiger store and purchase your Tiger Dollars now.
Launched in April, Ken Shreve's newsletter, Ultimate Growth Stocks, has had an overwhelming response, and his outstanding results have not disappointed. Using his unique method of combining a fundamental review of sales and earnings with technical charting for entry and exits, Ken is posting multiple double-digit percentage gains. This month only, you can lock in the low introductory rate of $395 per year. Log on to TFNN.com today to gain instant access to Ken Shreve's Ultimate Growth Stocks newsletter.
Looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618 88888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make. Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit tfnn.com today.
TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com.
Hi folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Welcome back, folks. Ken Shreve with you. Breakout Investing with Ken Shreve on TFNN. Looks like we're bleeding a little bit into the close with a little more than 5 minutes left to go in Tuesday's session. The Dow now down close to 100 points, 0.8% to 12,494. NASDAQ under a bit of pressure as well, down close to 4 points. That's 0.1% to 2838, and the S&P 500 down 6.5 points or so, 0.5% to 1331. So looks like we could see a close near session lows today. Not great, but we've talked about the fact that volume, once again, very tepid in the market today. Doesn't really feel like institutional selling. We've talked about a few breakouts today that have settled well off their highs, and many breakouts actually trading near session lows as the market continues to bleed. Excuse me, into the close. Okay, before we went to break, talking about Helix Energy Solutions, interesting company here. It's an offshore energy company, basically provides reservoir development solutions and other contracting services to the energy market. It also has its own oil and gas properties, and the company raised its production outlook for this year. Had a nice breakout today, over $19.20. Company earned 39 cents a share, up 117% from a year ago, with sales of 13% to $338.3 million. Remember, I don't like to chase stocks when they get extended past a proper buy point, so do the quick math on Helix right now, and it is about 6.7, 6.8% past that swing point, so slightly extended in price. But this is an interesting company indeed. Another example of a strong earnings report today. The news wasn't all good in earnings. Under Armour, this is a name that I followed off and on. Stock is really having a rough day today, down a little more than 4% to 75.16, trading all the way down at its intraday low pretty much today. But Under Armour, they were talking about rising cost pressures on its gross margin. The bottom line and the top line growth was certainly there. Earnings were up 71% from a year ago. Sales up 42% to just over $291 million. This is an outstanding company, but again, when investors start to hear apparel makers like Under Armour talk about cost pressures on gross margin, it can have a negative impact on the stock, and that's what's happening in Under Armour. Taking a look at Amazon, it reports earnings after the close today. Amazon technically still looks pretty decent. It's been moving sideways for 2 or 3 weeks now. Stock is up 74 cents currently to $214.23. Again, ahead of earnings after the close. Be interesting to hear what Amazon has to say. What's also interesting is that quarterly profit is expected to decline from a year ago, down 22% from the same quarter 1 year ago to 35 cents a share. Sales growth is the story with Amazon. The company is spending a lot of money to improve its distribution network. This can negatively impact bottom line growth, but sales growth has been consistently strong for several quarters in a row. Sales are expected to be up 43% to $9.37 billion. Also after the close, we're going to hear from Buffalo Wild Wings, Las Vegas Sands, that's LVS, Panera Bread, also scheduled to report after the close. They're expected to earn $1.17 a share, up 38% from a year ago. Sales up 19% to about $450 million. Also, Questcor Pharmaceuticals is a name that I follow, looking for earnings from them after the close. Coming up tomorrow, more earnings from some excellent growth names like Tupperware Brands, TUP, Green Mountain Coffee Roasters. We have time. We could take a look at GMCR ahead of its earnings report tomorrow. They're expected to produce another strong quarter. Shares up 20 cents to $91.96, acting very well ahead of earnings. So we'll see what Green Mountain has to say tomorrow. Don't forget to check out a free trial to Ultimate Growth Stocks right on the homepage of TFNN.com. I'll be back on Thursday at 3 p.m. Eastern. See you then, folks.
Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging